The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour. And as always, we come to you at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? Well, first of all, S&P's down 40 points, NASDAQ's down 182. And that's with the backdrop of volume being fairly light today, 6.7 billion shares on the CBOE consolidated tape. If you're new to the show and want to track the same volume I do, email me at path@tfnn.com and I'll send you the link to the CBOE website. But a bit light out here, which is kind of interesting, and maybe that is part of the pop. Of course, also today, we're going through the end of options rollover. That's where, not options rollover, options delta neutral. That is where the monthly options get hedged out. So what is going on won't hurt them anymore. If you've got an option out for 30 or 60 days, you've already gotten 95% of the profit. Think of it, if you've ever replaced a battery and you go and you get your battery replaced after 2 years and it goes bad, maybe the battery was $100, you pay half of it. By the third year, you only get $20 for the battery. The fourth year, as the warranty runs out, you get $5 out of the $100 you originally spent. That the money you get back dwindles quickly the longer the time goes out. So they're basically looking at the $100 battery, and the most that they're going to make is $5. If they get out of town, get out of Dodge now, they can bank the 95% already that they have, and that's what they do. Now, they can't just get rid of them all. Of course, there'd be no options out there. So they just hedge the positions. If they need to buy a long position against a put or a short position against a call, that's what they do. And then that kind of locks it into what's going on for the last 7 days of trading. So we continue to see a very interesting market, mostly because at this point you get a really good idea of what these market makers think as they've hedged their positions, and I get a fairly good prognostication as to where the market's going, and it really hasn't moved. We've gone through about 10 days where they think that somewhere around 4,000 on the S&P cash is where we're going to be on the 17th. That doesn't mean that, like Otis on Mayberry RFD, he's not going to wander around drunk for a long time before he knows it's midnight, has to go in and get in the drunk tank himself. And of course, if you haven't watched that show, you've missed a lot. 877-927-6648. Email me at path@tfnn.com. And that's it. Do you think the Fed's intentions to ease the market down in a stair-step fashion by alternating between market bullish and market bearish comments over a longer monthly period? It does seem like they're manic depressive. They can't decide what they want to do from one time to the next. But, the history of the Fed has been making rather massive mistakes and making them and blowing the market up, although they're supposed to be there to fix it. Of course, their biggest mistake was probably letting Lehman Brothers blow up. They thought that would be a good lesson for everybody. And the problem was they let them get there. I don't know if they could have done anything. The history of bubbles in the world that's probably best chronicled by, what's his name now? It's A Short History of Financial Euphoria by the economist for JFK. I'll think of it in a minute. But certainly that book goes back to the tulip mania and even before, of giant bubbles in the markets. I think he wrote it in 1993. J. Kenneth Galbraith was his name. I finally remembered it. At my age, a lot of those things just slowly percolate up into the consciousness. But I don't know if they're doing that or if they're just hyper worried that something's going to blow up. But to say that they're going to drop interest rates, I could see them maybe say we weren't going to raise interest rates, but they have a cut before the end of the year, when just 2 hours before that, the Fed president said that maybe we'd get into that in late 2024. This tells you how bipolar these folks are. I have a feeling that, they sit there and go, the market's going to crash now, so we better throw something in. And the idea from the Fed, or at least when it was formed, was to let the air out of the balloon slowly. They messed that up in 2008 with Lehman Brothers. But I think the worst part is they think they have a lot more control than what they do. And now that they have computers, they think their confidence in how much control they have is even greater. And they're just fooling themselves. This is kind of like a big ship in a very small harbor that only has one speed, and that's full. And they think that they can just kind of ease it in and ease it out. And you pretty much have to be perfect. And we can tell that the history of the Fed is not being anywhere close to being perfect. Anyway, good day to give me a call at 877-927-6648. We'll go through some of the big movers of the day when we get back. Let's do a little history.
Then it's all just a little bit of history repeating.
On this day in 2005, Google Maps is launched to the public. I've never had to ask directions again. Not that I did before. And of course, why that was big, I think the biggest screw up that the current CEO of Apple had is trying to push out their Maps product. They put away about 1/10 the amount of money for Apple Maps as Google did, and then pushed it out and then fired the guy that had to do it. But man, you got to feel kind of for the guy that was put out there as the punching bag for that, to try to go up against Google with 1/10 the amount of money and 1,000th the amount of programmers. On this day in 2005, Google becomes the preeminent map company and still is. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we come back, let's go ahead and start looking at some charts here. I think I had these up here. These are the big movers and shakers so far today. So we'll take a look and see what we have. Big gap down from Amcor, AMCR. Let's go ahead and move this out here, over here. Produces and sells packaging products in Europe, North America, Latin America, and Asia Pacific regions. Company operates through two segments: flexibles and rigid packaging. Anyway, not a bad pattern out here unless you came down. You did come down on lighter volume. The gap up was on November 10th, and that was with 7.9 million shares. Unfortunately, you're back into it already with about 7. So you're going to probably have more volume, or you might have found support here. Of course, packaging companies, good canary in the coal mine for what's going on in the rest of the market. Run for someone saw me say that. It's the Taco Bell ad, but I always remember the run for the border ad. I always said run for the bathroom. But Chipotle has gapped down. Now, this is a pattern that we've seen a great deal of, and this may be the alternate pattern that explains a market top that may take a little bit longer, and that is the double repo. But I've got a ton of stocks, may get to them today, that have done nothing but go kind of straight up, never have really violated or pulled back enough to even kill the or touch the 3x3 displaced moving average. And this is kind of how you get it. Fairly big move lower for Chipotle. And you got okay volume. Is not massive. I don't think it's the end of the world for these folks. But certainly when I see this pattern developing. That is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 days above the 3x3 without a little bit of a back and forth. You kind of know that you're waiting for. Now, can you just fall apart? You can. The bigger destruction would be a couple of days under the 3x3 displaced moving average, another close above it, and then the next move below it. You get some action, then that would actually indicate you'll go back to start at the very beginning of that pattern. In CMG, that's 1344. We don't have confirmation of that pattern, but to me, that would be the big one, which is almost, 400, a little less than 400 points. So if you could get back up a little in the next few days and then fail, generally that Joe DiNapoli pattern says that you go right back to where it all started. And yeah, that'd be about 1,360 points, 1,340, something like that. If this is just a one-day thing, as far as earnings being missed, that would probably indicate that you only have about 1,570. It comes down on lighter volume to that level, 1,570, 75-ish. Then maybe it's actually a buy, but you got to watch the volume over the next few days. But these patterns in the next 3 or 4 days, if they do set up, we've chronicled some of them on the show. Just how well they do work when the setup confirms. But we'll continue doing that over the next few days and see how many of these do set up. CMS Energy down a little bit. Not a lot of volume on that one. CVS, the drugstore company, drugs. I always was upset that in Mrs. Robinson they didn't have... He said plastics and didn't say drugs. Anyway, CVS Caremark, nice pop today. Volume kind of light, though, for the move. I guess it's not that huge of a move, but certainly a pop. Okay. So anyway, that's it's interesting. I don't see anything in the chart pattern yet other than the first bounce. Dominion Resources still have kind of a move down. The good part today on this one is lighter volume. You are back into this candle. You're looking for something less than 10 million shares. You got about half that. I do like the energy off the January 4th high is lighter than the move up from the December 12th low. So that pattern is starting to set up. Now, can you still see 57.50? That would be back, in that with a continuing half the volume of that major low. This is a nice pattern. The question is, you're kind of in that high volume down day, which really was the 6th of December. Do you get a chance to actually get that low in about 57.50? I think that would be another one you want to keep an eye on. In phase was out of phase. It popped severely and gave it all up. This is a pattern that we're seeing more of, and why I'm wondering whether or not we're going to just have a bigger pattern develop. Okay. A bigger pattern develop in the market for losses. Okay. Oh, I wanted to get to this. That's why. Okay. Where's this? Okay. Okay. Nice pop. Okay. Oh, that's what I wanted to talk about. Microsoft was kind of the same thing. We had they really did everything to juice it yesterday, had huge amounts of volume, tried to pop it yet again today, and pretty much gave it all back up. We're pretty close to the lows of the day at 268.54. Any close back below 263.92, the December 13th high, is problematic. You really wanted to see a maybe 60 million shares yesterday. You had 50. It's not all bad. Today you got about 40. But so many of these stocks are setting up for a bigger trading range and not straight breakouts. Microsoft's discussion, as we said, 2 weeks ago? And I think a good 2 weeks ago, we talked about Microsoft being one of the biggest early investors in OpenAI, the chat GDP people, GBT. And they're going to put it in Bing. Everybody, I think, got the little cart before the horse on. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And yeah, Alta is one of those same kind of stocks. It did have just 2 days underneath, but really you're back to the 22nd of December of them running this up. So it's probably due for some kind of pause. The lines are still around the block, as I've said, out there, which reminds me another one. Maybe people in the other parts of the country can tell me or call, especially if call in, give me your impressions. But there's a new restaurant called Cane's. Who's like got these tasty chicken fingers. I ran out at lunch and tried them. I guess it's good, not cheap. I think it was the smallest thing they had was like $10. I'd never had it, so I got the little platter of 3 chicken fingers some French fries and a drink. I think it was $10. The chicken was much better than fast food. But maybe people can tell me in their area of the country. I hear they're real big over in like Nevada that way. I see that they added one in Miami 6 months ago, and they're adding one here, or they just added this one and opened up the last day of January, and actually snarled huge amounts of traffic around here. But occasionally just seeing stuff like that, maybe people can tell me about it. 877-927-6648. Anyway, back to Ulta. Support's about 475, so you could have a nice snapback on it. Volume really hasn't been determinate, and you're really talking about that 475 area as where volume was really good. You never broke out of that area of early December with any kind of gusto. Where are those Slits commercials these days? Anyway, no gusto. But you did kind of move up. And you're kind of just hanging out here. The big problem is they're still busy. I didn't drive by it today, but I think I drove by it Friday or Thursday last week, the local, and it was still busy. So just think of it. Always a line here in Colorado? Thanks. Well, if that becomes a public company, that is probably one to watch, because it seemed to me that people already had the word down here. Now, I was told, but I never could find out, that there would be a handful of people that would have chicken free for the first year if they showed up that first night. And they had filled the parking lot of the Sam's Club next door with people. And I thought that's where I was going. So I go in there, I talked to the employees, and they said they knew it was going to be a problem. They came over and gave us all free food the night before. Anybody that worked at Sam's got free tons of stuff and coupons for more stuff. They said, I know it's going to be a tough day, but they gave everybody coupons and everything else and free food the night before they opened. So, interesting. Anyway, back to Ulta. Sometimes these great trades come in just like I see, where, you go and go, okay, lines around the block. Not quite for Ulta as much as the Cane's chicken fingers, but a brisk amount of women in and out of the Ulta salon. Now, I've never been in it. People tell me it's fairly expensive, which is probably good if you're invested in it, and probably not good if your wife wants to spend money there. But that's just my thought. Do we have anybody calling in? I thought we'd have somebody. We'd have somebody calling in. Is that how they make them? Is that kind of an air fried thing? Is that what started the whole chicken finger thing? Anyway, they were tasty. I liked the dip. I thought it was going to be from New Orleans. I thought it was going to be spicy. It really wasn't spicy. Yeah, I think it's just because they look like fingers, right? You don't know where that finger's been, though. As we continue to hang around these levels, yeah, we'll see what happens. Generally, we get to this part of the day. Options, delta neutral is kind of almost over. We may have a little bit of overhang. I think it really started a bit yesterday, but I still see a little bit of what's going on in there. In fact, what I wanted to do here is run this again. So we'll do that. Anyway, yeah, somebody brought up Tesla, and I hadn't looked at that, so I added it to my list here to run. So we'll maybe get that before the end of the show. Anyway, in phase, we looked at Ulta, a big deal. Fortinet, huge pop in this, back into the gap lower of August 4th. Is it August? Yeah, it's August 4th. last year. It's down to 20 million shares. Unfortunately, you're only into that right now with 13 million shares. That could come back and fill that gap. Illumina, the big guys on the street for DNA. The problem they had is that they built machines for a lot of these companies like 24andMe and other genealogy companies, and the demand from the public of giving their DNA away has just never really been what they thought it was going to be. The 23andMe is run by, the CEO is the ex-wife of the Sergey Brin, one of the big Google guys. And that. Yeah, I don't know. But certainly down. Volume's about what it was yesterday. It's just, they're overbuilt for a while, and I think it's going to continue. DNA machines, that is. JD.com down a little bit. It's just back to support, though. Lumina has bought the big one. They dropped the Chalupa. What else can you say? That's probably pretty much it. Are they going to come back up is the question. Let's go back and see how bad it's been. I mean, you're down at lows. Man, if I was short this thing, I would be, you got huge volume. You probably got some kind of selling climax. It'll probably take 3 months or 6 months for this thing to base out, but there may be a good trade in that when the short sellers decide that it's probably a smart thing to cover when you can, not just sell when you can. E. coli chalupas. For that, was someone's bringing up CMG. Remember Andy Heck? I wrote his headlines for his Seeking Alpha because he'd always want some kind of idea to write an article about. So my best headline ever that got the most likes from him was when CMG had their big deal, and it was the Chalupa hit the Titanic iceberg of indigestion, something like that. I'll have to look it up. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And as we're back, a question about NVIDIA. Is this the same kind of patterns that we've got set up? Yeah, but this generally, as I said, I love these patterns when they go to the Joe DiNapoli double repo pattern. We've made some absolutely monstrous trades on this pattern when it does develop. The problem is you have to let it develop, and most people do not have that much patience. As Warren Buffett says, the stock market is a device for taking money from the impatient and giving it to the patient. So, you may, if you've got a good ability to sit on your hands, you probably have topped out here, but you're probably going to go down, go back up. But again, I love these patterns where you have, 20 days above a 3x3. You dip down below it. Generally, there's not a lot of a warning. Wyckoff called it an automatic rally at the bottom, but you have the same kind of thing at the top. There isn't any big signal other than you just crack real good. Then you kind of come back up. You go above it. The volume all falls out. A lot of times it's 50% of what it was before. Nobody wants to buy it. And then the next move below it is curtains out. And like I said, it goes right back to where the start of that whole pattern is, and that'd be what, $68 on this, apparently, almost, maybe a little more. So could you have a big crash in these? It's probably less likely for NVIDIA than it is AMD. Unfortunately, NVIDIA will probably get painted with a broad brush. As I said before, yesterday and days before, NVIDIA has been able to get past the business of just selling to consumers and retail kind of products and into the business side with hiring a lot of people from IBM and Oracle and these other big S&P 500 companies and selling them machine learning GPUs and systems and making their own first real GPU cloud services business that's big. So they don't have quite the problem that AMD has, although AMD, of course, is starting to get much better at going after Intel's cloud service businesses with making products that can compete with them there. They're not quite as where they need to be to eat Intel's lunch on the server side, but each month they get a little bit better. See what else is going on here. So there's that. Question about Rambus, RMBS. And this used to be the big time company because they had and made royalties on existing technology. So what they'll do is somebody like one of the big companies that makes memory will kind of give them a patent, and they'll go out and chase people around for the royalties for it. But they're kind of the clearinghouse for that. You've got a huge setup out here. I'm wondering if you're looking at this as being one of the patterns where you want to go short, because this is a beautiful double repo pattern. All you need is a close yet below a 3x3. You're up exactly as I kind of talked about it, which is you go above it, you go below it, you went above it, you close below it. You're pushing one more time higher out here. And it's not as clear as some of them are, but you're up here on half the volume today on less than 900,000 shares so far today. My guess would be any move back below it would take you back to about $37. So that is an opportunity. You don't have it quite yet. That's for Mike. Okay. Let's see. Let's go through the rest. Again, we've seen Palo Alto kind of continue to kind of work its way down. There is a fairly decent drawable trend line, and it's up at that today. Volume is not all that exciting. So far, you got 4.2 million shares. Last big day, you had 6 million shares. You've had 6.5 million shares. So this is, at this point, kind of a light volume push. It continues to kind of bounce around. I don't think there's that much room to the downside, but kind of looks like you're in these trading ranges that you could be maybe at the most 178 and back to like maybe 140-ish and be just in a trading range here. Other companies, I think a lot of people were talking about this pre-market. Solar Edge with a little pop, it gave a little bit of it back. I don't think there's a lot to write home on that. What is it? Under Armour is under the price it opened at. See what I did there? With a lot of volume, 15 million shares. 7 million shares so far today. Right now, 15 million shares today. I was right the first time. I was right before I was wrong. Back down and lower. Now, one of the things you need to know about these, and one of the reasons why I hate shorting companies that are less than $30, is depending on what retail broker you have, they won't let you short anything under $10. Some of the bigger ones like Interactive Brokers, if you don't trade like a clown, will let you short stocks down to $5. I'm just not a big fan of either one. But unless you're a big street name and you got a lot of money behind you, it becomes progressively harder to short these stocks down here. And you will find that $10 just tends to be support a lot of times on these companies that have problems, even though they're probably not that good. People just can't short them anymore, at least on the retail side of it. Uber did have a nice pop today. It's got volume 84 million shares compared to the 42 million shares on September 15th that it's breaking through at. Let's take a little bit bigger. So the big problem you have is that you're really going back into the March 29th, 2022 move. That should be minor resistance. And if you can get a couple of days together, and I'm wrong on the market topping out here, 45.90 would be your next target to the upside. Okay. Yeah. The only problem I have is just the horrible energy that you really have had since the October 11th low out here up. You had about double the energy, not quite double the energy, from the March 29th, the high of last year, down to the June 30th low. So, yeah, are you going up? There's just, it's probably more than likely getting ready to stall out, maybe by that 45.90. But still a good trade if you bought at the lows. We're going to the break. We'll be back in just a minute.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And maybe we get to it tomorrow, but I've got a ton of stocks that are just doing this. And the problem with this, and as we've seen it in the past, is they do come back. And even if it's just a 50% retracement, especially if options are cheap and everybody's bullish, you generally get it fairly quickly and a lot deeper than most people would think. But whether it's Apple or the rest of these, you'll have a couple of days where you get some volume, but it just hasn't been that exciting so far. We'll see how the end of the day comes out. We're down 42 on the S&P 500, down 198, 189, he said. On the NASDAQ, down 26 on the Russell. Dow's down 191. So is there a lot going on here? As I said, volume's kind of low. We have very light participation by the big guys that normally trade in the dark pools. There's a lot going on with options, on zero-day options that people bring up every day. It's really, since this is new, we don't have an idea what's going on behind the curtains, but we saw just what the big blow-up was a little over a week ago when one company got hacked. And, there's a lot more going on here, I think. As we said yesterday, some real market manipulation by the Fed at 2 o'clock yesterday, talking which seems to be rather ludicrous call that we'd actually be cutting rates by the end of the year. I think the only way we do that is if we have a market crash. And I don't see anything that really indicates that right now. I'm kind of looking at the worst case scenario to the downside at 4,000 now, but we'll keep up on that. Sell when you can, not when you have to. We will return like patent to the Philippines. And yes, I know it was MacArthur.
Building wealth trading in the stock market seems impossible.